I'm in the camp that likes to have hedge funds short. That's particularly if that's the consensus, that's extremely bullish for markets. Obviously, have to cover. If you look at hedge funds as an index, they're wrong 50% of the time, and you'd expect that. Different strategies, obviously, but the added bonus about hedge funds and why they can add a lot of volatility, and sometimes to the upside, is many of them use 3 to 7 times leverage. So when they're wrong, they're really wrong. And obviously that's even been exacerbated in the crypto market, where we've seen lots of leverage blow up all kinds of different business models, which I consider very healthy. So the reason that it's been difficult to really call the bottom in the market or time the market, if you weren't participating in it during the 5 weeks of trading in July and August, you've missed all the gains this year. And they were unanticipated gains when the market decided that the economy was much stronger than people gave it credit for, and that consumers, still awash in $6 trillion worth of free printed cash, are still spending. Whether it's 50 basis points or 75, it's one of the above. And then probably one more hike after that, and then we'll have to see what the Fed does. But all of this is baked into the market, and earnings in the last quarter have been much better than anticipated. So everybody's been confounded by the economy, by the market, and even crypto. I was just going to say, from the context of an investor, not any one specific blow up, but over the last 90 days, we've had catastrophic failure in all kinds of different business models, from stablecoin to platforms that do lending. I mean, this is actually a good thing from this perspective. I mean, what's occurring here is the experimental business models, or what I would call, without showing any disrespect when I say this, but just idiot management teams that have never had any experience with leverage, because leverage has destroyed platforms long before crypto, whether it was stocks or bonds or real estate. If you don't understand what you're doing with leverage, you get wiped out, and you should get wiped out. And it's a very important learning experience for the market, and it scrapes the patina of idiot management out of the ecosystem. And it leaves the remaining companies much stronger. And that's the important part. When a Luna gets wiped out, an algorithmic stablecoin, it's a good thing. Now, yes, you have to sacrifice the company, and you have to sacrifice some shareholders, but it's for the greater good. And I think we're probably in the third inning of that. And the remaining companies are far better off. There's much more to acquire. There's assets out there that are very inexpensive. There's a consolidation going on. And the majority of survivors are much better at managing their situations. So, agnostic to the next thing that blows up, and I'm sure there'll be more, my attitude is, who cares? This is great news. Well, first of all, the merge has been forecasted to occur for 4 years in a row now. So for all the excitement, I'll believe it when I see it. There's a lot of people that are dissuaded from doing this in the Ethereum mining business. So they're not that excited about it. So you've got, an inconsistent harmony occurring. And now anything could happen. But really, at the end of the day, ETH it's slow and it's expensive. And so if it doesn't fix itself, it's going to have lots and lots of competition. And so everybody has an opinion on this. And I think the market is being the market. I have a pretty big position as well. I'm going to wait and see what happens, because it has attracted more applications, more usage than anything else to date. But that doesn't mean it's fixed in stone. Anything could happen. And so I also think that there's other applications, from HBAR to Solana, Polygon, all kinds of different ideas in terms of how this should happen, and how financial services work, and the cost, the speed, the fees, the transparency, auditability, security, all of these things. And I tell people, look, if you want exposure, have at least 7 or 8 positions on these projects, because you just don't know. So diversification on this very nascent system, and whether it's where it all fits. And when people tell you, well, I know with certainty this particular level 2 is going to really work, they have no idea. It's the adoption by users of apps and applications on top of it, and payment systems and transparency and all the rest I mentioned, that will eventually determine whether that platform is profitable or it isn't. At the end of the day, if it never makes any money, it's going to zero like every other business, and many will go to zero, and that too is okay. There'll always be, opportunistic token creation and trying to define it, whether you're playing a game or whether you're using it to buy something in the metaverse. There's so many different use cases being tabled, but in the end, when you look at most markets, what you find is it's the adoption of standardization that creates value. So if all of a sudden there's 10 stable coins that come to market for payment systems, my prediction would be that there'll only be 3 survivors 10 years later. And they'll be behemoths, they'll be very large, and they may have slightly different attributes. But, there's already 64 billion in Tether and 54 billion in USDC. They're likely to survive, assuming they can survive audit, and then maybe a few others. And always the rumor of the feds themselves creating their own digital dollar. I'm very skeptical of that. The last place you want development work done is with the government. They're the worst at it. So I'd let the private sector figure that out and just the government provide regulation. So it's just like at the beginning of the internet, and all of a sudden when people thought, the internet's not going to be anything, look at it today, it's the backbone of every economy. The same thing I think will happen in crypto just by the amount of intellectual talent. NFTs are interesting because there's many use cases for them. Obviously, the idea of a JPEG of an ape or whatever else, that's interesting and very speculative. I don't see the long-term value of that, but that's okay. A market's a market. It doesn't matter what I think. It matters what the market thinks. It's not something I put on a balance sheet and think will appreciate over time. I'm more interested in authenticating hard world assets with NFTs, whether that be real estate, cars, pens, watches, jewelry, collectibles. There's a lot of use case for that and a lot of utility value in that. And I think in the metaverse, if it unfolds the way a lot of people are thinking about, NFTs will be a major part of the currency for transactions. So there's a lot of work to be done there. Most firms that have attempted to monetize it have had a very, very difficult time due to the extreme volatility, and most of this being sort of digital art. I really see the challenge of the NFT market is it's almost impossible for the layman to mint an NFT. So difficult. And then understanding how the wallets, whether they be centralized or decentralized, work is impossible for the layman. So it's the use interface that is so difficult for the average person. And so we're a long, long way. I would argue that the wallet business for just crypto altogether is, if crypto's in the third inning, the wallet hasn't even started the game yet. It's such a crappy vehicle in terms of security or ease of use or reporting or anything. So there's a lot of work to be done. And for, when you go to these crypto conferences, even the Bitcoin conference, there's 2 universes. There's 10% of the people, 1 out of 10, are hardcore Kryptonians, if you want to call them that. And they're great. They were the founders of this industry, and they're still very adamant about how it should be, and their opinions matter. But 99%, the other $1 trillion, $5 trillion, $20 trillion worth of interest, are institutions looking from the outside in. And when you go to these conferences today, the majority of people are not investors yet. And so you realize what the great potential is, but also the roadblock of policy keeping us out of it. I think if we don't get some policy next year after the midterms, we're going to start to lag. Crypto's not going away. Bitcoin's not going away. Ethereum's not going away. These projects are here to stay. They're well funded. There's a lot of use cases for them. I use USDC now corporately. We have a Circle account. We've gone through compliance and our auditors setting it up. You have to hire a whole bunch of people to manage this stuff for you. So we're so early in all of this. But again, that's the potential. That's what excites me about it. In our operating company, we have a weighting of 20% into crypto across all the different, owning shareholders we have, like WonderFi, like Mutable Holdings, like FTX, like Circle, and then the tokens and the coins themselves, like USDC and Bitcoin, Ethereum, Solana, HBAR, Paula, and Helium. I can go down the list. I own them all. And that's because I don't know with certainty which are going to work and which aren't.